So today we'll be looking at pending orders and how to place pending orders. Pending order in forex is the client's commitment to the brokerage company to either buy or sell a security at a predetermined price in the future. What do we mean by that? Um, you you open your MT4 and you want to place a price, you want to buy or sell at a better price, you could set what we call a pending order. And whenever price gets to that point, it will be triggered and your trade will start running. So we have four pending orders in the one is the buy limits, the buy stop, which is the second one, and the third is sell limit, and the fourth is the sell stop. And the fourth is the sell stop. So what it means is this, and you can get it from your order. Once you click on your market execution, you see the buy limits, the sell limits, the buy stop, and your sell stop. So these are the four market execution which are known as pending order. So what it simply means is if you want to place, we'll look at two, which is the buy stop and the sell stop. So how do we go about that? First thing we do is you look at your trade, you see the current market price. For a sell stop is placed below the current market price. What it means is a sell is provided in the future, which means you have to place a price below the current market price, which means you're expecting the market, whenever price gets to that point, it should trigger and start selling. So what we do is, in order for you to place a sell stop, let's say you're visualizing that, oh, the market is going to sell off. All you simply do, you're expecting the market to sell off. All you simply do is you pick a price below the current market price, which means immediately price gets to that point, it will trigger and you're expecting the market to sell, so you make profit. But if your trade is triggered as a sell stop and it keeps buying, you'll be in loss. So this is what we are going to do. In order for you to place a sell stop, your price has to be below the current market price. So we are going to pick this price as our sell stop price. What you do is you click on your execution, then you go to market execution, then you click on sell stop. So this is the price at which you are willing to sell in the future. So what you do is you're going to impute the price which you want on 1553, and we are going to execute the trade. Now we've executed our trade. This is our price. We're expecting this market to sell. So we've placed this, our trade is triggered. Now this is what is happening. Our trade is triggered and the market is still buying. So we're expecting a sell-off in this market, so we make profit. That's the essence of placing a sell stop. So now our trade is running in profit because we placed a sell stop, and we are going to close out or lock our trade at 5, 6, 5, 2. So 4, 8. So we've locked our trade. So what it means is we're expecting this market to keep going down and we are still running in profit. So that's the whole essence of sell stop. Now, for buy stop, a buy stop is placed above current market price and you're expecting the market to keep buying in order for you to make profit. So the next thing you do is you click here to place a buy stop. You come to market execution and you place a buy stop. So you're going to pick a price above the current market price, and I'm going to pick 11543. 11543 as my buy stop order, and I'll place. So I have my buy stop order placed at this point. So whenever price gets to this region, it will be triggered as a buy. I'm going to close out this. So we'll have our buy stop. So we are expecting this trade to be triggered. Once it's triggered, it will automatically be executed as a buy. Now it is triggered and our trade is running. So we are expecting the market to go up, so we'll make profits. So a buy stop order is placed above current market price, while a sell stop order is placed below current market price. So we are running in negative because our trade was triggered and the market is still selling up. So we're going to close out this order. Now we're going to place a buy stop and a sell stop. I'm going to pick this price for my buy stop, 11547. Oh, sorry. Buy stop 11547, 547, and I'll place my sell stop. Oh, this is going to be triggered, and I'll place my sell stop below this price, 11532. Sell stop 11532. So we'll have our buy stop placed above current market price and our sell stop placed below current market price. That is how to place your pending order. So the buy stop, you're expecting the market to buy off from those points so you can make profit. And as for the sell stop, you're expecting the market to sell from this point so you can make profit. So our buy stop has been triggered. This is what happens when your trade is triggered. So our buy stop is triggered. We're expecting the market to keep buying so we'll make profit. Okay. Results. That's a loss. So once this is triggered, it will turn into a sell. So that's how to place your buy stop and your sell stop. We'll make a video on how to place buy limits and sell limits because it's opposites of this. So this is how to place your pending order. The buy stop you're placing and expecting the market to go up. Okay, this has been triggered. See what happened here. See how fast the trade was triggered. And this is for sell stop.